Today we are looking at Apple, ticker symbol AAPL. Is this a buy? We've just had their earnings on the 29th of October, and we're going to be doing a discounted free cash flow and a Buffett-Graham intrinsic value to work out a fair value of the stock based on these new financials. We're also going to be looking at the fundamentals to see if they pass the steps, and then also some technical analysis in the back end of the video. Let's get straight into it. Apple currently has a market cap of 2.4 trillion. It's the second largest company in the world, only behind Microsoft. It has a share price of $151.29, a 52-week low of $112 a share, and a 52-week high and its all-time high of $156.26. It pays a 0.95% dividend. We're going to be talking about the dividend after this, so stick around for that. And the ex-dividend date is the 11th of February, so you want to buy your shares before that date if you want to get paid the next time Apple pays its dividends. So first, can we have some likes on the video, please? Once again, really helps me out, and I'll keep on bringing as much stock analysis as I can. But let's get into it. Is the PE ratio less than the market? Yes, it is. 26.7 to 28.5. So that is a pass. Is their revenue increasing? Yes, it is. 265 billion to 365 billion. That's a massive increase, 100 billion. And I expect the profit to be doing something similar. Yes, 60 billion to 95. And the profit is actually increased more than the revenue, which shows they're managing to get more profit out of their revenue. Are they buying back their shares or issuing new ones? Apple are buying back their shares, which is good for two reasons. Well, firstly, it's gone from 20 billion to 17.3, but the first reason is it gives shareholders more stake in the business, because if you originally had 10 shares and there's 100 shares in the company, then you would own 10%. If they then bought 50 of those shares back, then you would have 10% out of 50 shares, which means your stake would have increased to 20%. So they're rewarding shareholders. And also, another reason that companies do this is they think their share price is undervalued, so they're buying it at a good time. So Apple are expecting this to keep shooting up. Next, we want to look at, is the free cash flow increasing? And that's the final pass. Yes, 64 billion to 93 billion. So that is 5 passes. It has a free cash flow ratio of 26.6, which is very similar to the PE ratio. 2.5 trillion divided by 93 billion equals 26. And is this dividend safe? The 0.59% dividend, they pay out around about 14.6 billion per year. And with a 92.3 billion free cash flow rate, then obviously the dividend is safe. So there's no worry about that dividend. Just before we get into the valuation, I want to look at Apple's dividend yield. So currently, as I said, a 0.58% dividend yield. The annual dividend is 88 cents a share, and it actually has a dividend increase over the last 10 years, which is probably surprising people. Apple is on its way to becoming one of those dividend aristocrats. It has a 3-year dividend growth of around 31%, and the dividend payout ratio is 15, as we said. But you can see here, Apple is steadily increasing their dividend, and they have been for the last 10 years instead here. I mean, if we go down here, you can see that the dividend, where's it gone? Sorry, a bit further down. You can see that, yeah, the dividend has been increasing. The yield has been changing over time, but the stock price has dramatically increased. But you can see the dividend from this time in 2013, it was 9 cents, and now it is 19 cents per quarter. So you can see that it's increasing. But let's go on to the valuations. So what we're using is a discounted free cash flow model here, where I've calculated the future free cash flows of Apple, gives a terminal value, and then discounts it at the day. And what we'll do is it'll give us a calculated stock price, and then we'll be looking at the Buffett-Graham intrinsic value. But first, let's have a look at discounted free cash flow and what it says about Apple. So with a calculated stock price of 169.99 cents, which means it's currently at a 12% discount. So discounted free cash flow does seem to like this stock. This is with the free cash flow increasing, which it has been doing every year. You can see the jumps from 2018 to 2021 has been around 30 billion, and it's actually slowing. But you would see that this, even based on these more conservative estimates, discounted free cash flow still says Apple is a buy. Now we want to look at the Buffett Graham intrinsic value, which takes earnings per share and expected growth rate into account, and this absolutely loves this stock. It has a fair value of $220 a share, which is a 45% discount, and a Graham price, which is basically if you see it at this price or lower, buy, and the Graham price says it is a buy with $165.61. So both of the models are in love with the stock. Apple is not an overpriced growth company or anything like that. It is a free cash flow generating machine and is undervalued according to both of these models. Let's just quickly see if the analysts agree with us, and yes they do. They have it as a strong buy, 27 ratings, 21 buying, 6 holding, and they have a price target of $170 a share, and on the high side about 200. Some on the lower side at 132, but even then that would be pretty shocking. But yeah, anywhere between $170 and $200 a share, which if we go to there, puts us in the regions of what both of these models are saying. So just want to have a look at some of the technicals here, which also would say if it is a buy. I'm going to quickly add some moving averages here. I like to look at moving averages, MACD and RSI. So let me just quickly add a 50-day in green, which is the shortest moving average I like to look at. A 100-day in yellow. Let me just get that one up now. 100-day here. And then we want a 200-day in red. And what we're looking for here is sort of bullish price signals that we want to see. So currently the price is above all of the major moving averages, so that is a buy signal. You can see here that when it did dip below it, the 100-day did act as a level of support. It hasn't crossed below the 200-day in quite some time, basically since the pandemic. So if Apple ever gets that 200-day, that would be a buy. This was a massive buy signal here, and even at the 100-day, it's a buy. So I would say, according to the moving averages, it is definitely a buy because we have some bullish. The only negative thing here I'm seeing is that the 50-day is crossing over the 100-day, but overall the price is above all three of the moving averages, and which is a buy. Let me just quickly remove these. The next thing we want to look at is the MACD, which is the next indicator I like to look at. So the only interesting thing about the MACD is you can actually see it's in negative at the minute. So overall what we want to see is the MACD in the signal line above 0. That is a bullish signal, so you can see here this is bullish, but we also want the signal lines to be crossing, but you can see it's crossed at this point and it looks like it's about to cross again. So this was, if we look at previous points where the signal line crosses, that was a signal line cross, buy signal, and went on a massive run. Here was a buy signal here, went on a pretty large run, and you just have to take the profits, unfortunately, at the right time. And here it's a buy signal and went up. So we haven't had one this short in quite some time, but it looks like it's about to cross over the other end, which would be a buy signal. Finally, I just want to look at the RSI. This is the relative strength index, which says if the stock is in overbought or oversold regions. And currently it's around about the middle. If Apple is in the oversold region, which I said on my last video, that would be a buy. Here it was in the oversold regions, buys. Here it was in the oversold, and once again here was in the oversold. But right now it's sort of in the middle, not really either side. But if it does get in that lower point, it would be a buy. Right, so I think that's all we want to look at. Actually, one more thing I want to just quickly do is one thing that we have seen with Apple since the stock split. I just want to bring up a parallel channel here. It's one of the things I like to look at to see areas of resistance and support. Oops, sorry, I've done it the wrong way. Click here and then go over here. So you can see it's been trading in this channel since the stock split. It hasn't really broke above the highs or the lows of here. In fact, the lows have actually decreased. So let's not even do a parallel channel, because the highs have been clearly defined, but the lows are actually getting higher. So we've got this line up here, and oops, sorry, trading view's been a little bit fiddly. And then we've got this one here, which comes from there, and actually, if you see, it is decreasing over time. So currently the stock is in the middle. If it did get to around about the 170 region, then maybe that would be a signal. But if it drops anywhere to this line, that would be a definite buy signal. This has held up since the stock split in September. Right, guys, thanks for watching. Please give a like in the video if you enjoyed it. Consider subscribing if you're not already subscribed, and I'll catch you guys next time.